Hi everyone. The 11th of May 2021 will go down in history, or it should go down in history, as the date at which markets switched their attention from the coronavirus pandemic to our old foe, inflation. In this video, we'll find out what happened and why. I'm Anthony, and as always, we're talking money. Okay, this is yesterday essentially, the 11th of May, and markets tumbled by quite a significant amount. The FTSE 100, for example, dropped by a huge 2.5% in one day, which really, by historic standards, is quite a drop. In America, a similar thing happened, and that's been over 2 days. And the reason being is that inflation expectations in America have gone from 2.6% in April to 3.6%, which is really quite a significant rise. The reason for this is that commodity prices are starting to go up quite steeply. That's things like copper, iron ore, lithium, palladium, all those type of things. And that's because as the coronavirus comes to an end, there's pressure on commodities, and it takes about a year or so to get new mines on stream, and we're a long way away from that. So there's only one way that prices go when demand goes up, and supply has yet to catch up, and that's upwards. So inflation is climbing in America, and it will do too here. But what's the significance of that? Well, the Federal Reserve has two remits. First of all, to keep inflation low, and also to keep unemployment low. And in this very unique situation where you've got a coronavirus which has really suppressed demand within an economy and unemployment has shot up, to have rising inflation at this sort of stage of this economic cycle is quite unique. So the Federal Reserve is under a bit of a quandary as to whether to put up interest rates to suppress inflation, but at the same time run the risk of increasing unemployment, which it really doesn't want to do. It's hoping, and it's quoted in the papers today, that the Federal Reserve think that this inflation spike is just temporary and not sustained. If it is sustained, then it won't have any choice but to put up interest rates. It's a real problem because the economy could be mired in what's called stagflation, where you have basically a stagnant economy but rising inflation, and that's really the last thing that anybody wants. The markets are basically expecting the Federal Reserve to curb this inflation threat by increasing interest rates. And that essentially makes money more expensive, whilst money itself becomes less valuable with inflation. Inflation really is a scourge of economies for those two reasons. So what are the signals that the markets are giving that inflation is starting to become a bit of an issue? Well, gold prices are starting to go up. They went up from the sort of mid-1700s last week. They're now in the sort of mid-1800s this week. Also, you'll find that long-dated interest rates or yields on long-dated bonds are starting to go northwards as well. But one of the hammer blows with inflation is that the yield that you get on fixed, safe entities or asset classes like bonds means that holding risk assets like shares becomes less and less attractive, and therefore people sell them off and the prices go down. And that's basically exactly what happened yesterday. It's going to be really interesting to see what happens over the coming weeks and months as coronavirus subsides and inflation worries probably increase. Anyway, we'll see how it goes over the coming weeks and months, and I'll give you updates on whatever I observe and read in the papers. But until the next video, I'm Anthony, and as always, we're talking money. Bye for now.